they've clearly seen some tremendous tailwinds serving as essential businesses, consumers seeing extra stimulus in their pockets with little place to spend it. Do you expect to continue to see this dynamic in the third quarter this year? Let's start with you, Michael.
Yeah, what we're seeing is one of the greatest redistributions of wallet share in recent history, where consumers are not traveling, they're not going out to eat, they're not going to concerts and other leisure activities, and they're binging on the consumption of goods. That is benefiting the well-positioned largest retailers who have scale and the capabilities to serve that demand. We're going to see that continue not only into the third quarter, but also into the fourth quarter. It's going to benefit these big, well-positioned retailers.
Simeon, another big story that we've seen come out of these bigger retailers this week has been that of e-commerce. The fact that we're seeing sales from their e-commerce sites, sales from digital, increase, 1 times, 2 times, 3 times, even 4 times what they were doing last year at this time. What kind of base are these increases coming from, and do you expect that trend to continue?
Yeah, the base is such a great question, because at the end of the day, if you're a company, you need to know that your revenues are coming rather than your revenues from e-com are coming. So e-commerce is allowing for companies to be able to offset these declines. And again, as they continue to grow, that'll be important. But at the end of the day, I mean, that omni-channel buzzword exists because the stores and the brands need to meet the customers where they want to be. So I think what we're going to find is increasing focus on e-com, and everyone has used that word acceleration or accelerant for COVID on enough time to kind of become the new buzzword. But at the end of the day, you need to drive revenue wherever the consumer is willing to spend it. During COVID, that's absolutely gone.
So Michael, where does this go from here? I'm hearing from chief information officers in the retail space that they had plans to migrate to the cloud, perhaps to implement an omni-channel strategy throughout 2020, and they accelerated that dramatically, and that's what's benefiting them now. Does that continue? Does that spend continue? Are there competitors, even smaller competitors, who might have had scaled down plans, who now have to ramp those up? Michael? Absolutely.
The pace of innovation, the pace of online adoption is here to stay. And so retailers will have to adapt. And the good news is that the large retailers like a Walmart, like a Target, like a Home Depot, like a Lowe's have been able to adapt very quickly. In the last 3 months or so, have rolled out innovations like buy online, curbside pickup. And not only that, rolled out innovations to the degree where when you're at the store, you can click a button and they will walk out and bring the product to your car. That's here to stay. The question is, when this wallet share shift recedes and people go back to spending on other categories like leisure and food away from home, what does the overall retail pie look like? And what do overall margins look like? Because a lot of these initiatives are very expensive. The retailers are assuming the burden of costs that historically have been borne by consumers. That could structurally change retail margins depending on what the future top-line environment looks like.
And Simeon, what's your take on the margin impact of what these retailers might continue to have to do to just be prepared whichever direction consumer tastes go in as far as how they're actually going to shop?
Yeah, absolutely. And I think Michael's point is so critical. So I'm glad you followed up